Tom Piotrowski, hello to you. How are we shaping up today?
Pete, quite well. We've seen the SPI futures and after hours trade push on quite nicely. A gain of around 0.2% is anticipated for the local market when we kick off later on this morning, and that is a reflection of what's been another constructive session as far as Wall Street's concerned. Pete, you might recall earlier in the week markets stumbled, but they have recovered in the 2 days since, and we've seen new record highs for the S&P 500 and the Nasdaq subsequently. So the Nasdaq up 1.6%, the S&P 500 up by about 1%, and an important part of that has been that the US Federal Reserve Chairman for the second day in a row has been up on Capitol Hill talking before congressional committees, this time the Senate Banking Committee, and the conversation around managing inflation struck the right note again with the markets. We've seen a moderation where interest rates have been concerned. That's been very helpful as far as computer chip stocks are concerned, reflected in the fortunes of the Philadelphia Semiconductor Index, Pete, which measures that part of the neighbourhood, up by about 3.5% to a new record high. So all moving along quite nicely. It's just a question of the jobs numbers tonight, which are coming out in the US. If they land properly, well then that'll see these markets in better stead when it comes to consolidating on their gains. Elsewhere, we've got oil prices just a little bit weaker at $78.90 US a barrel, so down by about 1/3%. Gold a little bit firmer, up by around 0.8% to 21.64 US an ounce. The point I'm trying to make here is that the US dollar has fallen to a 1-month low, and that's been quite supportive as far as most commodity prices have been concerned, with the exception of oil, obviously. And we've got the Aussie dollar surging ahead as well. It's trading at 66.2 US cents.
All right, thanks for that, Tom. We'll talk to you later.